Wow, what a bike.
I put a lot of work into it.
You know what? I'll take it.
Really? You sure you got the money?
To be honest, I don't. But they do.
Hi everyone, my name is Raffael Johnen. I'm the co-founder and CEO of auxmoney. And I think this movie shows very nicely why we founded auxmoney in the first place. My co-founder and friend Philip, who's here in the audience somewhere, had exactly the same problem as our hero in the movie. And we found out that this problem resonated with a lot of people, and that has led us to create the strongest brand and the strongest fintech brand in Germany alone. So let me share a few facts about auxmoney before I explain what we do exactly and how our model works. So auxmoney is a marketplace for credit. We bring together borrowers and lenders on a marketplace. And the innovation that we do is around the credit scoring. So we look at people differently. So we thought if we are able, and we want to be able to give more loans to people than what banks are in a position to, then we have to look at people differently. And at the end of the day, that's a data game. And that's where our innovation lies. We've been able to generate over 100 million euros of volume on our platform last year, tripling from the year before. We have some very nice investors on board, some of which are here in the audience as well, Index Ventures, USW. And we have more than 50,000 investors, retail investors, investing on auxmoney actively. We also have institutional investors, such as Aegon Insurance out of Holland, that are investing very actively. So with our new approach, looking at borrowers differently, we've been able to unlock a whole new market. 14 billion euros of credit volume each year is the potential that we see. This is the volume of borrowers that should get funded but don't get funded. And that's per year in Germany alone, 14 billion euros. So who are the people behind this number? Let me give you a few examples. These are employees in probation period, typically rejected by banks. These are students that have just finished or are about to finish their studies, which want to travel the world. They don't get a loan from the banks, but they should. These are self-employed people that have a regular income, steady income, but don't get a loan from the banks. So all of these are our typical borrowers that come to auxmoney. And banks not only struggle to look at those people, but also they think, or their legacy systems basically makes it very expensive to underwrite these loans. So that's where technology comes in handy, automating a big part of the chain, and therefore that's another reason why we can be more including. And technology allows us to offer a very quick and very easy customer experience, something in particular when it comes to the credit business is very important because we all know a banking process can be very comprehensive. So this is our business model in a nutshell. So what we do is we bring borrowers and lenders together. So the borrower fill out the application form, and auxmoney scores the borrowers and then gives access to those approved loans to the investors. And we do not only score the borrowers, but we also underwrite the loans. We then originate the loan, and we service the loan on behalf of the lenders. So we take out the middleman, the classical bank, and we bring together the borrowers and the lenders directly, and we pass on the benefits to the borrowers in the way of lower interest rate and to the lenders in the way of a very attractive return. So we spoke about why we unlock and how we unlock a new potential for borrowers. But actually the same is true for the lenders. So we give access to a new asset class to lenders, which before was only available to banks. And it's a very attractive asset class. It's low volatility, it's very predictable, and that comes later. And over the last years, on auxmoney has been very consistent and always in line with expectation. I'm going to share a few numbers in a second. So our formula for success, I mentioned before, lies in the credit scoring and the way that we look at people. So we look at a lot of data, and what makes us different here again is we also look at a SCHUFA, for example, something that banks do as well. But in order to accept more people, obviously we have to look at more data and be very intelligent about which criteria are relevant and how do we combine those so that we find out which criteria do matter and predict which lenders will return or which borrowers will return the loan. So all of that data then flows into our risk assessment engine, which composes of a verification model, underwriting model, pricing, scoring, and fraud model. And again, all these benefits goes to both sides of the marketplace, to the borrower, where more loans to more people, better experience, cheaper loans, and to the investors that get access to this very attractive asset class. So let me show a few numbers here as well. Over the last 12 months, auxmoney has been able to generate a net return of 5.5% for its investors. And in contrast, you see the performance of other asset classes. I think what's important here that it's not only an attractive return, particularly in these low interest environment times, but it's also very predictable. So if you look at the past, you will always see that we've been able to very well predict the returns, and not only as a whole, but actually in each of the score class that we put the different borrowers into. And with this track record, we've been able now to expand the lender base. So it's not only about private investors investing on the platform, it's now also about institutional investors on the platform. So that is something we started doing 1.5 years ago. Our biggest and anchor investor on the platform is Aegon, which I mentioned at the beginning, which have made a 150 million euro commitment. And it's a nice validation of our model because you only get a commitment if you can really prove that, that the risk engine works, and it does. So let me finish with what makes the beauty of the marketplace lending model, because I think it's quite interesting. So the longer our track record is, the more investor trust we have. And with that more investor trust, the investors demand a lower risk premium or a lower return on the asset. And that allows us to pass on that benefit to the borrowers by way of lower interest rate. That in turn attracts more borrowers, that attracts better borrowers, and with that you get an even better credit performance, an even more predictive credit performance, and that allows you to expand your track record even more stronger. And with that, our loans become cheaper every day, and the returns for the investors go up. And I think that's the beauty of the model, and that's what we're living through every day. Thank you very much.